Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Good day. Ira Epstein of Linn & Associates with your metals market update for this Super Thursday, as they're now calling it, and that's June 8th, 2017 at about 2 p.m. Central Daylight Time. Okay, so we've been seeing safe haven buying that I told you earlier in the week was going to start unfolding. For those of you that get my research, I think we pinpointed it right on the head, to be honest. You had buying going into Super Thursday today prior to the past 2 days of the gold market. You've seen the euro, the Swiss franc get bought. You saw the bonds and the notes getting bought. Basically the safe havens all the way through it. And then what we've got now is the Super Thursday. So let's discuss what we've got. In the euro currency, Mr. Draghi came out. The market took a nosedive on the fact that he's going to keep a very easy monetary policy. He's considering increasing the asset program if warranted. He is not going to go further on lowering of interest rates. He doesn't think deflation is the enemy that it was, but inflation is lacking. Growth is there, but it's moderate. That's what he sees. Nothing stellar. The market got a correction. Terrific. It's like restarting on a machine, a game. All right. I look at it that the game had your rally into this. Now it pulls back, it rebuilds, and I won't be surprised to see that market go up again. Dollar index going up right now. Now, what's next week? Let me listen in the back of my head. I've got this. I think I hear it. FOMC meeting. They're not going to drop rates. They're going up a little bit. So to get a small bid in the dollar in front of that, fine. But when you get it, you probably, you buy the rumor, you sell the fact. That's my thinking that's going on. Doesn't mean that's a trade idea. That's my thinking, and so far that thinking is working out. As I told people, I thought the safe havens would sell off going into today. ECB's out of the way. Mr. Comey's out of the way. We get the British election results late this afternoon in the States to early evening. They'll probably be coming in. We'll see what goes on. It's quiet time. You know, the polls don't come out and tell you the exit polls, I think, until 10 p.m. London time, and that in Chicago would be in the neighborhood of, if it's 10 at night there, it's going to be what, 4 in the afternoon here. So we'll see what happens as that comes out. Energy markets not doing an awful lot one way or the other. They're very, very quiet. So let's take a look at the gold chart and understand something. The market this week got to 1295.20 on a weekly chart, back up into this area that it failed before at, and it's pulling back from there a little bit. It is still up for the week $1.90. But it's into a key resistance area, and the trend is up. When we take a look at a daily area chart of closes, I'm looking at the August gold primarily, comes up to 1298.80, shy of the 1300 number, and the market is now backed off $17 from that high. Okay, but you haven't broken through anything key on the chart. When we look at the chart at this point, we can see how we had the break here, the big rally, market pulling back, and you see on the swing lines that you've got higher lows. So we've had a pattern of a low, a higher low, a higher low, and we have higher highs. That means the trend is up until 1261.30 is taken out. I then look to see off the pullback where might support be on the chart, and one of the areas is 1267, the 18-day average, and that is still above 1261.30. Therefore, if you get an extension of the break, wouldn't surprise me if that acts as the support zone. If that's the support, where was or where is the resistance zone? Well, my gosh, we hit it 2 days ago, and now we're backing off. No surprise there. Now, another area I look at, what about the slow stochastic? Let me explain how this works and get off of today. Let's go back to yesterday. Do you see how sideways the slow stochastic is over 80? That means I termed it and coined it as being embedded, locked in. When it loses that, it occurs just about every time with the red line first getting back under 80. Does it close under there? And as you can see right now, it looks that way, and the close is going to be, from the looks of everything, that way. So you lost the embedded reading, which, if it stays lost tomorrow, means prices and the 18-day average stand a very good chance of coming together for the support zone. That's how I use it. You still would have to take out 1261.30 in order to break the trend. Another thing that happens on the slow stochastic, it switches gears from embedded, the most bullish of the signals, to becoming overbought and has to work that off. The only day it can regain it is the day after it's lost. You lost it also in the ETF GLD. Now, if you lose it there, I always look to see, are they in sync together? And they are. So the odds are, if it stays down and the futures stay down, well, that's it. You're probably making a run towards this 18-day average of closes. You'd have to take out 120.06 in order to break through the most recent low and break the swing line. Look where the ETF of the gold miners, GDX, fell back to. Right into the support that I've mentioned yesterday. I'll mention it again today. And if we go back to yesterday, you were at the upper Bollinger Band. And I'm pretty sure that I said, if the market pulls back, look for support first here and then possibly the 18-day average. It's exactly what occurred, but you're overbought. So it's not an ideal condition in any of the metals in terms of gold. I shouldn't say metals, in the gold, to be long just yet here. But they have not turned their trends down. They have lost their upside momentum. The gold-silver ratio is right now at 73.54. The highest it had been was 73.50. That still favors gold over silver. And on the silver, you can see you're backing off here, but you've kept the embedded reading. That doesn't mean it'll keep it tomorrow, but it's kept it at this point in time, and the market is acting good. The resistance now, 1756.50, that 100-day average. And how often do you hear me say it to you? The first time you, from underneath the 100-day, you rally back to it, it's often a pivot zone where the market tries to fail. The support in this market is 1720.40. The key to me is keeping the embedded reading. If you lose that, then you're probably going to make the run there. Now the key is to take out today's highs if you're a bull. If you can do that, maybe then the market adds not only to the momentum, it'll already be over the 100-day average, but the upper Bollinger Band comes in play. This is a more interesting chart to me than the gold. The copper market was a surprise. Copper, I thought, was going to get sold very hard by the pros right here at the 18-day average, and they'd protect it by not letting the market get over 257.55, so 257.60. If that's taken out, then into play comes the what? The upper Bollinger Band, and you went right there. So yeah, the short sale didn't work, but the market went right to that upper Bollinger Band and stopped right on its shoe. Now what about the platinum? Well, the platinum market's down, which means the palladium market's probably up, and that's how the spreads go back and forth. This has been in a market that had a higher high and a lower low. Not a trend. Momentum is pointing down and bias is down. This could still be headed to 926.70, whereas the palladium market has got the higher lows, higher highs with an embedded reading. It's in its own world to the upside. And this is a popular trade between platinum and palladium, and it has been my whole career in business that I've seen the metals trade. So it's pretty interesting. Now in the dollar index, okay, you're losing the embedded reading. Where should prices go according to my theory? The 18-day average of closes, 97.12.7. You got to round it, let's call it 97.13. Today's highs, 97.13.5, so it's already gotten to that point. It's not trending. It's oversold. It's going to probably play this game for a bit as it gets ready for the FOMC meeting that takes place, I think, Tuesday and Wednesday of next week. So you got to be careful with all this, all right, and understand what goes on as these things go. You know, do you want to bet against the dollar as the Fed's going to raise interest rates? Now, you're asking me, how do I know they're going to raise rates? Well, I look at the CME Fed Watch page, and the probabilities are super high. That doesn't guarantee it'll happen, but the probabilities are over the top. I want to take that bet, and that will probably prop the dollar up temporarily. You put it all together and you come up with game plans. And that's what I want to talk to you about now, my game plan. This is the course that I put my heart and effort into. If you like what I say here, why don't you learn to do it yourself? You heard me. Learn to do it yourself. You're not seeing everything I do. Example, the page that just went by is a window envelope page. Where do you get the numbers for those? How do you put them on the chart? Because I'm not showing all the profit tools that are there. And a window envelope is always only a profit tool. So the course, let me explain it. It's 54 video chapters. It's all online. I don't mail anything out to you. There's no shipping, no handling. The course is $99.95. But with the super code that I put back up just today, Ira 20, I'm going to lower the price for you to $79.95. Now, for that $79.95, you get our charting package. That's $100 by itself. You get access to my twice daily updates. That's $60. Some people are already taking my research and they go, well, if I get the course, I'll stop that and put the other. It doesn't work that way. I'm not out to shoot myself in the foot. I'm assuming you're not getting my research. I throw that into everything for you. So you get that package. It includes my morning video that you don't see anywhere but when we send out the link and you get the link. It's not on YouTube or anything. You need a user ID and password to see it. I'm going to walk you through what I think the day's trade is going to be about. I'm going to throw out day trades for you. I'm going to throw out position trades. Everything I can think of is right there reinforcing the 54 videos that you're getting in the course. And you will see it's like every day going to a tutorial and learning what the markets are about, including my twice daily written updates and my oral updates if you want those as well. So you're going to learn swing lines, slow stochastics, moving averages, inside days, outside days. You're going to learn how to work with everything that I play with. And I think you'll find that all of a sudden, you add that to the window envelopes, you got yourself a game plan. Can you add other parts to it? Of course you can. How do you get it? Click right up here now. If you're watching me on YouTube, it'll take you to the form. When you get there, remember to type in the coupon area, Ira 20. If you call us, my staff will take care of you at 866-973-2077. You can go to our website also at www.iraepstein.com. Under the word education, you'll see all the different fields about it. You can just click to buy it, Ira 20, and we answer a lot of questions in that area of our website about the course. Remember, it's all online, no shipping, no handling. It's quite a value. I'm Ira Epstein. You have yourself a great day, and I will talk to you all tomorrow.